Thank you for coming to learn more about the Northwest real estate market. We are excited to present to you the trends and the highlights we see happening in the current real estate market. First, we'll review some statistics from the USDA report for 2017. Farm real estate values, that is cropland and pasture land, were up $70 from 2016. They now are at $3,090. Regionally, in the Pacific states, there was an increase of 8.7%, and in the Northern Plains, there was a decrease of 1.8%. The Corn Belt states' highest value was at $6,260 per acre, and the Mountain states' lowest value was at $1,130 per acre. For farm real estate averages in the Mountain states, this table shows the price per acre from 2013 to 2017. As you will see, Idaho's higher than Montana and Wyoming on average, and is up to $2,600 per acre. In the Pacific, in Oregon, Washington, and California, you will also see an increase year after year from 2013 to 2017, with California being at $8,700. This next graph shows you the trends from 2003 on until 2017. It's a continual growth upward, and what we would expect to see in the future as well. Now moving on to cropland values by region individually, they remained unchanged at $4,090 per acre from 2016 to 2017. The Pacific region increased by 3.8%, while the Mountain region increased by 1.1%. You will see in this graph on the cropland values that they were priced higher in 2014 and 2015 and dipped a small amount in 2016 and 2017. Some of that could have been due to commodity price changes. Looking at the states individually, in the Mountain states, Idaho's on an average of $3,400 in 2017, while Montana and Wyoming are in the thousands. Moving on to the Pacific states, Oregon was at $2,860 in 2017, while California was at $11,290. The numbers we just reviewed are both irrigated and non-irrigated cropland in the states. Let's now take a look at where they are as irrigated versus non-irrigated. As you would all suspect, irrigated price per acre is much higher than non-irrigated. In Idaho in 2017, the irrigated average was $5,150, while the non-irrigated's average was $1,460. You'll also see that Montana and Wyoming show the same differences with non-irrigated versus irrigated. Moving on to the Pacific states, Oregon's irrigated was $4,850, while its non-irrigated was $2,120. California's irrigated was $13,300, and non-irrigated average was $4,600 per acre. Of course, these values will vary depending on what region of the state you live in or are looking at property in. Now let's move on to pasture land values. Pasture land in general increased to an average of $1,350 per acre. In the Pacific states, Oregon saw the highest increase at 2.9%, while in the mountain states, Idaho saw the highest increase at 3.8%. Looking at the pasture land average per acre for the mountain states, you'll see Idaho was highest at 1,350, while Wyoming's is at 510. You will see a gradual increase since 2013 in all the states. Now moving on to the Pacific. Oregon's pasture land was at $700 an acre, Washington at $850, and California was at $2,700. You'll notice that in California, the amount has stayed steady since 2014. Looking at this graph provided by the USDA, you will see that Idaho is on average at the $1,350 an acre, but the trend in the United States is an upward trend for pasture land values. All this information on the statistics from the USDA helps us see that we still have a strong, healthy land market. We here at Knipe Land Company have also done some sales research in our area through some proprietary research regarding sold farms and ranches. What we found in Idaho is that there was a 8% decrease in supply, while there was also a 13% decrease in sold properties. In Oregon, we found also a low supply of a 5% decrease, yet we found a large amount of sold property with a 40% increase from the previous year. In Washington, we also found similar trends as Oregon, but with a much lower supply of 22% decrease in supply and a 40% increase in sold properties. What we're seeing is that inventories were down from 2016, but closed sales were up in 2017, with the exception of Idaho. We are seeing that the demand for farmland remains high and that the prices in the Northwest are higher than in other areas of the country. Another trend we are seeing is that the average age of farmers and ranchers has risen 16% in the last 30 years. Our prediction is that there will be an increase of owners looking to sell because of their age, their health, inability to run the operation, or because they will have a lack of interest from family members wanting to continue the operation. Oregon State University reports that 2 in 3 farms and ranches will sell in the next 10 to 20 years. John recently saw a map of my kingdom, and they said that 1 out of 2 farms and ranches will sell and trade hands in the next 96 months. We predict that owners selling now may benefit from low inventory and higher prices. Tax-deferred 1031 exchange can be a great tool to reach what your future goals are. Over the last 30 years, 90% of Knipe Land Company's farm and ranch sales have involved a 1031 exchange. A 1031 exchange can have many benefits. 1, it can reduce family disagreements. 2nd, you can move your wealth into passive income, and you can defer taxes. And these are all ways to move your wealth into the next generation as well. Regarding reducing family agreements, it can work well if you say you have a $6 million ranch and you have 3 heirs, and they have different ideas of what they'd like to do. Maybe one's a software engineer and has no interest in farming. Maybe another one really wants to ranch or farm, and another one has a 3rd interest. You could sell your ranch and buy 3 different properties that would meet all 3 of their needs, so that there wouldn't be any disagreements when the heirs receive their inheritance. The other thing you can do, if you're looking for something where you've got some income in the future but don't want to have to do the work, you can move to passive income type properties. You could look at commercial properties that can be managed by somebody, and you just receive your monthly payment and have a a nice return on your investment. Thirdly, the deferral of taxes. When you do a 1031, you defer your taxes to be paid at a later date. If you resold one of those properties, you would either do another 1031 to continue to defer the taxes, or you would pay the taxes at that time. But if your heirs were to inherit the property, then they would receive a stepped-up basis at that time and would no longer have the low basis that you had come into the property with. So as you can see, there are many benefits in doing a 1031 to plan for the future. With that in mind, and looking at the statistics that we have been looking at, with prices being higher and inventory being low, and there's a strong market to sell in the Northwest, this could be the time to do that future planning that best suits your needs.